And we're live. 15,000 subscribers. We got there at last. I'll give it a minute or two just for people to join. I tried to give a bit of notice. I don't know if it was enough notice. And apologies if you can hear the washing machine in the background. We don't normally have that problem when we're recording a video, but it's a live stream, isn't it? That's what when you're doing all the videos, you can edit them. There's a few times where you might notice like a jump in the video where I say the wrong word or end up having a coughing fit. Live streams, it's meant to go wrong at some points, and I guess the washing machine going off in the background is is one of them. But yeah, obviously live Q&A session. I always normally try to do these whenever we hit like a milestone on the channel. The last one I think we did was obviously the 14,000 subscribers. By the way, I hope everything is going well. I hope you can hear me all right. I'm hoping you can. But yeah, we try to do these when we reach a bit of a milestone, and I think the last one we got was obviously 14,000 subscribers, which was around about 6 months ago now. So it's taken around about half a year to get up to the next 1,000, which is a while. But obviously, I think there's been the big speed up has happened in the last couple of months. Obviously, the market helps. Whenever there's kind of the good market, everyone kind of piles in, and then when there's the kind of the bear market, then it really slows down. So the last kind of year is just kind of been a bit of a drag, but obviously what's really helped is in the last few months and the big speed up here. So what I'll do is I'll try and go down. Cool. Dylan says sound and video quality all good. That's what I wanted to hear. I'll try just work my way down the questions. So if you do have a question, stick it down. We'll try go for half an hour. I always say half an hour. Ends up being longer than half an hour. Ends up being 45 minutes, maybe even an hour. So we'll try to get through as many as we can. Thank you very much. Congratulations. You looking at any new stocks? Yeah, I mean, obviously I did the stocks that I'm buying video yesterday. There was a couple of new stocks in there. Obviously, there was the PDD. That was a new stock. There was Fiverr that was entered into there. And there was also the new stock that I've not mentioned on the YouTube. So, yeah, there's been really 3 new stocks into the portfolio, which is quite a lot for me. So, with them new stocks here, I'm okay at the moment. There's a few that are catching my eye. Obviously, the market so far this year has been a couple of tough days, hasn't it? So, I mean, if the market carries on pulling down as much as it is doing, then maybe we'll get a few more opportunities out there. We'll see what happens. But, I mean, Nike's having a lovely drop at the moment. It would be even better if it goes even lower from here. That's quite interesting. I mean, I've got still weighing up something like a Team 17. There's another stock that I want to have a look into as well, which I think is quite interesting. So yeah, there is a few stocks that I'm looking at, but at the same time, I'm quite happy because I've actually recently put in a few new stocks into the portfolio at the same time. So yeah, Tom, I tell you what, I always see you in the comment section, Tom. You've been a subscriber around here for a long time, haven't you? Gody, what a legend we've got joining us. TJ as well, obviously you're always in the comment section as well, so thank you for the support that you do. Great work, Jacob. What's your favorite US small cap and companies and UK AIM stocks? US small cap, probably Fiverr is probably the one that I'm most bullish at the moment. Just seems like there's so much negativity around it, but yet the valuation is pretty attractive in my opinion. The UK AIM stocks, Hotel Chocolate, because it just got bought out and made me a nice amount of money. What's your next buy price for SoFi? You know what? I was actually going to make a video on SoFi today, but I couldn't turn it around quick enough. And I also already scheduled in to do this live Q&A session. So I was trying to do a SoFi video today, but it just was too short of a turnaround. So probably going to drop a SoFi video tomorrow, actually. But yeah, a big drop today. Just comes off an analyst downgrade. I think the shorts are playing a few games at the moment with SoFi, which is a bit frustrating. Obviously, we know that shorts can play very dirty in the stock market. They can put a lot of misinformation out, make something look bigger than what it is, play on some news. We've seen them, with the short reports, we've seen them put out information in there that is incorrect, but there's no punishment for it, which is absolutely crazy that it's allowed to happen. So they will do the work they can to get the share price lower if they're short. And I don't know if you saw the downgrade today, but it looks like for someone that's probably short on the position, because they downgraded the stock from $7.50 down to $6.50, which is crazy because why would you downgrade? the share price. You would normally downgrade the share price if something has deteriorated with the business. But yet, all we have seen in the last 4 quarters is they've raised guidance and they're on track to profitability. It's insane market. They're trying to, control the share price, aren't they? It's insane. But I mean, the buy for SoFi potentially. I really like buying SoFi in the 6. You might tempt me at the 7, but I like the 6 for SoFi. What sector will dominate in 2024? I mean, there's it's a little bit tricky, isn't it? Because there's normally something that causes a surge. Like you would say that AI was the in-demand sector, but you wouldn't have known that until by the time it slaps you around the face, do you? So it's really hard to predict what the hot sector will be. There'll be something that happens that everyone goes, "Oh, look at that sector," and everybody will pile into it. But I couldn't tell you at the moment. But there'll be something that happens. It's hard to predict it. What a day for a Q&A. Love that. Do you have another job than investing in YouTube? Yes, I am a teacher. Good evening, Dylan. What are your top 3 holdings? Mine are Palantir, Airbnb, and PayPal. Currently, it's DraftKings, and then I think it's PayPal number 2. Number 3, what's number 3? Number 3 is close between a few stocks, without checking. I believe it is Hims and Hers. Yeah, it must be Hims and Hers. I'm just trying to think here. Yeah, I'm sure it's Hims and Hers number 3. Thank you very much, Dylan. Yeah, live streams are much harder. Just go with it only. Yeah, it's always nice doing the little editing and cutting all the and when you record a video, you don't realize you're doing it, and then you record the video and then you go, "Why do I say every time?" Like there'll be a few comments when I do videos, and they'll be like, "Oh, take a shot every time he says the word so and so." I'm like, "That's so true." Like, how have I said that word so much in that video and you don't even realize it? But yeah. It would be, I mean, I know people don't like this, and I said this about DraftKings to try and cool expectations because it had such a good year, but people need to cool their expectations a little bit. It's about not getting too greedy. We had such a good year last year. It would be very good for DraftKings to take a year off where it only goes up 10%. And I know people don't want me to say that. Everyone wants to see the stock accounts go up and up and up. But when it's had the rally like it has had, a 10-20% year from DraftKings would actually be pretty good for the stock to just let the numbers catch up a little bit to the valuation. And same for the stock market. We've been on such a good rally. It'd be very good for the stock market just to flatline for 6 months. I know people don't want me to say that, and I know people don't like hearing that, but it would be good for the stock market to have a bit of a chill out for a good 6 months. We don't want to get in a position like 2021 where we just get a little bit too carried away, valuations get a little bit stretched, because if we do have that pullback, that elastic band, it gets further and further, stock prices get further and further away from the valuations, and when you have the snapback, it's a bigger one and it hurts a lot more. So yeah, I know it's people want me to maybe hype things up, but I don't want to hype things up. I think it'd be good to have a bit of a cool down for sure. Good timing as I'm moving a lot of money market funds. Very nice. Yeah, I've got to say I'm on the most cash since 2021, which is nice. We actually covered Man United stock on the stock request on the Patreon about 3 weeks ago or something. So yeah. Where did you hear rumor on Monaco buyout? Couldn't see any. Yeah, there was a speculation. If you look on the there was the insider buying, Goldie. If you look on the insider buying, if you look at who's acquiring shares at the moment, there's a lot of speculation on that with the insider trading. So if you go and have a look there, I think there's the buys from there that a few people are going, is there going to be a takeover from there? So yeah, go on the LSE or something. You'll find it. What's your current take on Boohoo? Anything positive or is it all negative? Yeah, not much to say. They're not moving in the right direction at all, unfortunately. They are, I mean, we've covered it on YouTube a couple of times, but The styles seem very poor. They are not being cost efficient. Sheen's bad at them. There's no other way to put it. The return to like the high street, obviously they had no high street presence. So where we've seen Primark do very well, Boohoo haven't, because they've not got that physical presence. So they've lost out from that point of view. Online side of it, everyone's rotated to like Sheen. They're a lot cheaper. And people like the designs better. So they're losing from an online point of view, and the only outcome they have to resolve it is keep doing the same thing. Now, obviously, any of you guys are aware, if you keep doing the same thing and expecting different results, it's not going to happen. And I said that in my last video, like they keep doing the same thing and they're expecting different results. It's not going to work out for them if they keep doing this. So yeah, we'll see what happens, but I don't think they're in a good place. And I think I said on a few months back, I sold a third of my position in Boohoo, and I will continue to sell the other 2/3 every 6 months if there's no improvement in the financials, which I don't think, unfortunately, we'll see. But I'll reassess in summertime, obviously with summer trading, and see if there's that improvement. But I've got to say, I'm not optimistic about it, unfortunately. Have you looked at Pets at Home recently? 4% dividend yield and just completed a 58 million share buyback and announced another 50. Oh, they've announced another one. Yeah, a few people have been talking about it on the Discord quite a bit, to be fair. It did very well, didn't it? And it's having a bit of a pullback at the moment, if I remember correctly. I'm just going to see if I can find the... What's the ticker symbol? Is it Pets? Is it Pets.L? Yeah, Pets. Yeah, it is, yeah. Yeah, I mean, what's it? Yeah, so since 2021, yeah, it's down about 39%, isn't it? 18 times earnings. Yeah, I mean, it's a good company, isn't it? It's a good company. I mean, ideally, dare I say it? Could you get it a bit cheaper? I'm just trying to have a look on a profitable point of view. Is it? I mean, 4% dividend is definitely nice, and buybacks are definitely nice. Yeah, I thought it was having a bit of a dip in profitability. So it's gone from 118 million down to 82 million. I wonder what's caused that. But yeah, I mean, unless they're predicting 110 million in profitability in end of year for 2024, so March 2025. Unless they're predicting 110 million profitability, if they can do that, a 1.5 billion market cap with a 4% dividend yield and buying back shares, that's good. That's really, really good. It looks like they paid a chunk of the debt off as well recently. They had 120 million debt and they've got it down to 45 million. That's really good. I wonder what the dip in profitability is. Is that just because of inflationary pressures, energy pressures? Is that because the online side of it increased? I'll have to have a look into it. I'll be looking at what's going on with that profitability, but if we can do that 110 million, it looks good. Sorry, I clicked on the wrong link there. Is Card Factory still good at £1? Where is... I've got a book with all my... 1 second. Let me just have a look. Honestly, if I didn't have notepads, I would forget everything. Yep. Card Factory, I bought last month. It's going to be in the UK stocks I'm buying January video. Yeah, I did buy Card Factory last month. So, yes, I do like Card Factory at £1. Mobico, yeah, there's not much to talk about, to be honest with you. I covered the last update on the YouTube, and there's no trading update since then. So I've got really no new information on it to talk about. We should get a trading update in... Is it January or February? Would you an update from Mobico actually? Let's have a quick look on the investors and see if there's anything on the investors. But obviously the key thing with them is to hit profitability. They've got to improve the profitability. There's nothing on upcoming. If I look at 2023, so they did full year results on the 2nd of March. Yeah, so it looks like we're going to get the next update in March, I think. So we'll have to wait probably a good the first week in March. So we're going to have to wait a couple of weeks until we can have some more information about Mobico. But yeah, all is staring at the profitability. That's what we're all staring at. So hopefully they can improve it. Jacob, off topic, but are you spiritual? Any meditation? No, not really. I tell you what's the big thing is exercise for me. If I don't exercise, if I don't play, I play football quite a few times a week. If I don't do that, I go in a foul mood. Um, so that's the only thing that I noticed different in my mood swings is if I don't exercise or if I don't play football. But that's the only thing really. I don't think I've ever talked about that one, to be honest with you. I've seen it mentioned before. I think if I remember correctly, I've never been a fan on the profitability, but I've never had a proper look into it, so I couldn't really tell you too much about it. What subjects do you teach? Primary and primary. Don't want to deal with high school. I've done I had to do training at high school for a few weeks, and it was awful. Anyone that does high school on it, honestly, hats off to you. What got you into investing? What's your story? So yeah, you know what? I don't really talk about this too much, do I, on YouTube? So I first started investing in around about 2016, 2017. The reason why is I started working full time. Started working full time. Obviously, you get all this money suddenly, don't you? Which is amazing, but at the same time, you're looking at all this money, and I think quite a few people, when they start working full time, make the mistake, don't they, of falling into buying that car on finance, or maybe buying the latest iPhone on a quite inexpensive contract or something from that point of view, and you can end up making some bad decisions quite early on when you're young, and you have big monthly bills that can cost you for a lot of your first years of employment. You end up just working to pay off a lot of these bills. And I was at the point of view, rather than getting sucked into getting these monthly payments, is there any way that I can invest or use this money to make me more money? So I looked at a lot of different routes, and then what came up was stock market investing seemed like one that would be a good direction to go down. Big thing compared to now is that really, since in 2016, 2017, there wasn't really that much information out there. From a UK point of view, we're not as switched on as the US. So the US has definitely more awareness about investing in the stock market. In the UK, very rare to find people that are investing in the stock market or just buying indexes. It doesn't really happen in the UK at all. And so there's not really many people you know about that do it. And as well as that, there's lack of information. Like YouTube, for example. Not that YouTube's a fantastic place to go to for invest in education, but there wasn't really that YouTube side of it at all out there that existed at the time. So it was just trying to do as much research as possible. Eventually got a few rules to kind of follow when investing. Bought my first couple of stocks. My portfolio sat around, I think it was about 8 stocks at the time. You can probably go back and watch the first video of it, which was on the old channel, by the way. Any of you new guys, long story, but I had to switch channels in 2020. So on the old channel, you'll have to go watch it. But I bought 8 stocks, which were, so I bought Ferrari. It IPO'd, had a bit of a flop after its IPO, did really well. So I bought Ferrari. I bought Square or Block when it was called Square. That one did very well. I bought Live Nation, which didn't really do that much. And then what was the other stock? So I bought a UK stock, the Free Eye Group, that didn't really do much. That was quite flat. And then what was the other two stocks I bought? The other two stocks did pretty well. I bought another two stocks, and then from there, after I realised, like Ferrari for me came a stock that I was up over 100% on in a year's time. Also helped that we had a very good market as well, but that was the kind of realization to me, like, hold on, I've just put this money into this stock and I've been in here for a year and it's up this much. This is really good. And that was with a lack of information as well, or still trying to learn the trade in the stock market. So that did really well. And then after that, I just thought, well, there's clearly ways to make money on the way, and then just built up from there really. So yeah, been in the stock market now for coming up to eight-ish years now. And then originally I started the YouTube channel just as a bit of a tracker for me, just talking about like the stocks, what my stocks are up, so what stocks are down, and why I'm buying that stock. And I've just kind of carried it on since, and yeah, it's done all right. Ryan, I hope you're doing well. I wonder if you're have you still got Neo or not? After the latest investment, I'm sure if you have got them, that'll be some nice news for you there. Do you have an opinion on Burberry share prices at a 2-year low? Yeah, I mean, obviously it's a weakness in all. The whole higher end. What we had in the last few years is that we've had a lot of the like middle class being able to stretch to them higher end products now, because we've had that compression on spending in the middle class, and just that conservative being a little bit more cost efficient. People aren't going for them higher end products, and it's suffering from it. You look at a lot of higher end products, they're all kind of having it at the moment, where there's that kind of pullback from the spending. So yeah, I mean, longer term it should be all right. Burberry as a brand is quite an iconic brand, isn't it? The only thing that makes me nervous is there going to be swings where people go, that's not popular, it goes out of fashion and then it comes back into fashion. That's always a risk with buying into fashion brands, fashion stocks. Boohoo. You see that swing from in trend to out of trend, and that can, Doc Martens is having exactly that right now. So you can get stung on them a little bit more, but at the same time they can work really well. And if any of you guys remember, there was a stock I bought which was Revolve, and then that did really well. And Boohoo, for a certain time, Boohoo was a successful company for us. It's just not got a good ending now, which is the issue. So I mean, it can work out for you. Burberry itself, I'm trying to remember because I had a look into it. It's been really popular on the Discord. Burberry. Let me just have a quick look at these financials, and there's something that I wasn't a big fan of, but I can't remember what it is. I mean, it makes good amounts of profitability, doesn't it? Profit's really nice on that. I mean, if we can go back to revenue growth, that's decent. What's it currently trading at? 11 times earnings. It's not even that bad. I'm just going to have a quick look. Balance sheet wise. Balance sheet, 35% debt to equity. Yeah, I mean, if it was a cleaner balance sheet, it would be nice to have no debt on there. Oh, but they've got a lot of cash. 663 million of cash. It's not bad. Has it been insider buying? Oh, there has as well. Yeah, I mean, dividend. Oh, you're picking up a good dividend as well on it, aren't you? Oh, there's been insider buying as well. Who's been buying? Chairman of the board bought 78,000 worth of shares. The CEO bought some shares as well. He bought about 100k. That's good. What did he pay for it? He paid £14.89. That's, I mean, it's got to be about now, isn't it? BRBY. BRBY. Oh, it's even lower. Whoa, so the insiders have been buying. The CEO bought 100 in December. The CEO bought 100k worth of shares, and it's actually gone lower than where he bought his shares. At some point, this comes a buy. Yeah, 100%. What point does it come and buy? I mean, I don't know. What did he buy it? Was it the 9th? Yeah, so he bought the shares, and it's fallen another 10% since the CEO bought some shares. It's the same. It's near the same levels of the CV time as well. I should share my screen with you guys as well when I'm doing this, so you can see it. But yeah, I mean, at some point it comes a buy, 100%. It's just when you buy it. Even with the tough situation, it's always that risk to reward. There's always that, at some point the reward comes worth taking on that risk. And I think there is that risk with Burberry, but it's at what point do you accept, okay, I understand there's the risk here about the fashion swings, but at some point it should be a buy. Yeah. Neil says, well done, Jacob. Great channel. Sorry to bring up the old chestnut, but do you see S4 as a nice price drop opportunity? Oh, S4 Capital. S4 Capital. Talking to Martin Terrell, I liked it. I liked it. He was honest. He said we didn't do a good enough job, and he admitted that at the end of the day, as if we want to get valued as a good company, we need to perform as a good company. And he said that we haven't done that, and I like that. I like that when he came on and he talked to me about it, and obviously you guys saw the interview. He was honest, and at least he's admitting that the year that they've just put in, wasn't good enough. That's what we wanted to hear him say. Now the question is, can he improve it? And obviously, the environment that S4 Capital in digital marketing has been such a big area that's been hit massively in the last year. So we can understand why financially they have performed badly, but it still hasn't been good enough. And obviously the big thing that S4 Capital say is that we obviously overhired. So if they can manage their acquisition costs, manage their hiring costs, and even if they don't grow this year because the environment's tough, as long as they can manage their profitability better, then they should get reflected a little bit on the share price, even if they don't have a good year. I wonder if I can show you. I'm going to actually try and remember to share my screen this time. Right. So where is my stream? I'm hoping this works. Sometimes it doesn't work. Okay. You should be able to see the screen now for Simple Wall Street, I hope. So if you look at Simple Wall Street, for example, the growth was good, sure, some acquisitions in there, but your big thing that you have here is the losses you see. And this is what's caused all the pain on the share price, is that the losses have gone insane. Market didn't like it. And obviously, when you have then the flatlining or the decline in revenue and the losses, that's definitely what Wall Street haven't liked. And obviously, what have Wall Street come a big fan of in the last 2 years? They've been focusing on profitability, haven't they? So the fact that they had then the revenue flattening and then the decline in revenue and the losses they don't like. But the big thing is now to move up, to move the losses in the right direction. So you can see here 2022, 159 billion in losses, but you can see here the improvement that is happening down to 97. And if they do close off the the full year accounts here, moving into the 30 million, it's an improvement. Now the other thing is that then the revenue has to be controlled and move back into growth. You can see analysts are forecast next year for them to do 10 million in profitability. Now that is okay. Realistically, we need to see that ramped up more and more. That needs to be pushing up to 30, 40 million if this is going to work out big time. So that's what we need to see them do. The other thing that might happen is they might start getting judged off free cash flow. So if they do start moving into profitability, revenue growth still comes back and you see free cash flow of 86 million, that's good. Now, if you start working out free cash flow on a 301 million market cap, I mean, you're talking, 3 times, 4 times free cash flow there. So if that starts happening, if they can get that free cash flow going up, they move into the profitability, that's what the share price will react on. And if they can do, if they get back to even just a little bit of growth here, and they start, getting into that profitability, they start having that free cash flow. Even though these numbers still have a lot of way to go, the market will instantly switch and like it again. And that's what they've got to do. If SFR are going to turn it around, that's what they need to do to get the market going for them in the right direction, because they've burnt a lot of bridges, and they need to repair it with Wall Street if they want to be more reflected on the share price. There's a lot of work to do, and at least Sir Martin, when he's talking, and if you listen to the interview when I talk to him, you'll hear him that he openly admits this as well. So yeah. Oh, we got Alex. Hey, mate, are you all right? How are you doing? Hope everything's well with you. Chris says, do you think that Trading22 is a ethical platform, given they are promoting true to trading versus alternative brokers that pride themselves on offering options and promoting long-term investing? The thing with that is that I understand your point here. Yes, I agree. But at the same time, that is what's powering us to get the low fees, I guess. And the other thing is they are moving away from that side a lot more. If you look at the plan as a business, they are looking to move away from that. So it is what the company was based on to start with, and they are looking to move away from that. And without that, we won't get the low fees. And the other thing is that there's always going to be platforms out there that do that. So even if Trading212, move away from it, it's not going to solve the whole issue, I guess, really. So yeah, I understand it. And if they can move away from it, yes, that would be probably correct if they can do it. But at the same time, it's still going to exist. So the ultimate thing is that we can do is to have the education out there to try and help them or help people to avoid it. That's the only thing. And if you ever hear me cover Trading212, what I try and do is I always try and mention, like, there's the invest, the ISA, and the CFD account, and I'll always say that CFD account, do not touch it. You don't click on it. You straight off go for the ISA, and then if you max that out and then got use the invest account, you never touch that CFD option. Hook Group, not a big fan. Not a big fan. It's okay. I think there's a price that you buy it at, as it is with most companies, but not the biggest fan. Investing around 2016, 2017. Yeah, most platforms do it. So is it right? Is it wrong? Probably not right. But yeah, unfortunately, it happens in most platforms. I got told to invest in bricks and mortar, but couldn't afford a house, so bought Forterra. It's just yeah, I own Forterra. Yep, I like Forterra. I prefer Barrett Developments over Forterra. Barrett Developments is double the size of my Forterra position. But it should do well. Yeah, I like it. Bear says thoughts on PayPal 24. I feel like this is one stock in the market currently very undervalued. Yeah, PayPal is currently my second largest position. So yeah, I like it at these levels big time. It wasn't in the stocks I'm buying video last month, but I'll let you into a little bit of an update. I've bought it already in January. Just bought SoFi at $8.34. Do you think the stock will do great this year? If they financially do what they say they're going to do and what analysts are forecasting, it should reflect on the share price. But as we know, as the stock market goes, sometimes anything can happen in the short term. As we've seen today, if the shorts want to punish a stock, they can punish the stock. So I wouldn't say I wouldn't be buying it just for what potentially could happen in 2024. I'd be looking at SoFi for a longer term hold. But certainly, if they do the financials they should do, yes, I believe it should be reflected on the share price this year and have a good year. But we'll see what happens. We'll see what happens. Unilever, not my favorite company. I think the valuation could be. I think it's. I made that sound like it's a bad company. I can't even remember what Unilever's ticker symbol is. But I think if I always remember, it never gets to right valuation where I want to buy it. I'm just trying to have a look here. Unilever. What's it? Oh, it's not actually too bad now, is it? 13 times earnings. I thought it was like 17 times earnings. Yeah, I mean it's okay, but I mean the growth is so slow. Not that that's terrible, but it's not exciting. And when you're not got growth, you're going to lack a valuation. So even though 11 times, oh, it's cheap, but then you look at the growth and then you're like, it's never going to command a higher valuation because it is going to grow slow. I mean, what does it normally trade at? So from the limited data I've got, it normally trades around 14, 15 times earnings. So it seems to be trading to a little bit of a discount to the market or what it's normally done. I mean, the balance sheet, 6 billion of cash, 29 billion of debt. I mean, you see, it's just not standing out to me as, yeah, there is a bit of insider buying going on, isn't there? See, it's not standing out to me as like, wow, I've got to rush into that. I can understand why people would buy it, but for me, I look at this, right, and it's 13 times earnings. For me, I've got PayPal over there that's trading at 13 forward times earnings. So you're telling me I can go buy Unilever or I can go get PayPal at 13 times forward earnings. So it's going to be there in 12 months on the same earnings basis. And with PayPal, I've got a company that's probably going to grow 8-9% a year. Unilever, what's it going to grow? 2-3% a year. It's going to have treble the growth. Profitability's ramping up a lot more profitable, better balance sheet. So it's like it's just one of those like it looks decent, and I think if you bought it, you do well from it. But from my point of view, I just look at it and going, can I justify putting the cash there when I've got something like PayPal over there that I think is a more standout option. So yeah, it looks decent, but it's it's just opportunities. I think that's the big thing that I'm trying to say. Lovesack hit $30 there in December. Did you hold through after such a big jump? My concern was there was no update with regards to their notification from the Nasdaq. They had until November the 17th. Yeah, I think that will all resolve itself. I won't worry about that too much. It wasn't a major issue, was it? What was it? The shipping cost that they calculated wrong. Yeah, I still hold it. I'm up about 50% on Lovesack. It's doing quite well. I would have liked it to be a little bit bigger position than what it actually is. But I still got my Lovesack shares. So obviously I bought at the start of 2020. No, so the end of 2022, and then I sold out in 2023 when interest rates went sky high, and then obviously it dropped to whatever it was, $19 again. So yeah, I've still got Lovesack, and they're doing really well. BlackBerry. I remember when that started getting a lot of attention a few years back. Yeah, crazy. Lemon, we've got the Lemon joiners. What sectors outperform? Yeah, I mean, someone asked earlier about it, and it's hard to tell because normally when you realize the sectors that outperform, it's already slapped you in the face. When you look at like AI, was probably the last year's, and by the time you realized it, Nvidia was already up 200%. Granted, it probably went up another 100% afterwards, but it's a bit hard to kind of spot what is the kind of hot sector until it's really happened. I'd like to think that cybersecurity comes on at some point. I think when you look at the amount of cybersecurity attacks that are happening out there, you think that them sort of stocks. I mean, a lot of them as well. A lot of the cybersecurity stocks, they trade at really good like levels of gross margins as well. So you think about the profitability they could ramp up. Oh, granted, they've got to keep investing to kind of keep up to date with everything, but you'd expect them to have a stellar year at some point. I mean, obviously, the other thing as well is that you can always go to like the area that's been thrown out the year before comes back online. So I mean, you look at and as well as that the ones that were the big ones last year always go to like the underperformers, don't they? I mean, what what's been thrown out? I mean, obviously Chinese stocks are being totally thrown out. I don't know if they'll have a good year, but there's a lot of them isn't there that are really thrown out at the moment. You look at energy stock, solar energy stocks. A few of them got thrown out, didn't they, in the high interest rate environment? A lot of high interest rate environment stocks. Obviously, if you start getting cuts this year, I mean, maybe a few people go into them if they start seeing the cuts coming in this year. That might be where the rotation happens. So, if you were forcing me for an answer, that's probably where I'd point to. But it's hard to see it, isn't it? Do you think Persimmon is still a buy at these rates? I don't know what's going on with Persimmon, but I would say so. Obviously, I'm a Barrett man. I've got Barrett developments, and I would still I'd still buy Barrett's at the moment. Yeah. Are you looking at Robinhood? Not really. It doesn't look the worst investment ever, but I've got way too much fintech already between like PayPal, SoFi, and Square Block. So with them three stocks, I'm already fintech heavy, so a Robinhood would not be a great addition to my portfolio for diversification. I already look at all three of them and I go, I don't like having three in there. I'd prefer I'd prefer to have two in there. So Robinhood personally wouldn't be a good addition into my portfolio either, because of the stocks I own. And I like all three of them stocks better than Robinhood as well. So yeah, but I don't think it's a bad stock. It looks like they're trying to move in the right direction. So I think they're also the valuation doesn't look too bad. And I think they're ramping up the profitability a little bit more, which is good to see. So yeah, but I don't know it too well. So take my opinion with a pinch of salt. um, are you a fan of games weight shop? Yes. I've always struggled to see around how long how popular they would last for. That's always been my issue. But when you look at the historic numbers, that they've always delivered. So if I was to go off history, I would say that yeah, it looks decent. I've never heard of that one. Never heard of that one. Sorry. Hook Group. Yeah, I think someone mentioned it a little bit earlier. Not my biggest. I'm not a big fan of it. They haven't got the drive into profitability for me to like it that much. But there would be a certain level where I'd probably buy it. I mean, I don't. What does it trade at now? I'll have a quick look. The Hut. Oh, is it the THG now? Isn't it? Change the name. Yeah, I mean, if you maybe threw it down at 40p, yeah, I'd say that it might be worth a little nibble there on a small position, but it's not my favorite. It's not my favorite. Will you choose? Will I choose safer stocks in 10, 15 years' time as you reach retirement? I don't know really. I don't like to think that too far ahead. If I still enjoy it and I've still got the time, I think I'd still do it. Maybe there would be a kind of risk element where it wouldn't be 100% of the portfolio, but yeah, I'll see. I'll see. I'll see. Doku or Grealish. He's good in it, Doku. I thought it would be a decent signing, but geez, he's been better than what I thought. Problem with Grealish is he cuts back too much. Cuts back too much. I think he's scared. I think he's scared that Pep gives him a telling off if he loses the ball. I think he gets a bit scared about it. Hey Jacob, what do you think of Palantir in general? Personally, I don't think they are a spy company and should be good for the NHS. Yeah, I mean, if Palantir got to the right value, I'd buy it. I mean, I don't even know what it's valued at right now. Is it $20? I don't keep track. $20 a share. Oh, it's $16 a share. Yeah, you give me PayPal at like single dollars. If you gave me PayPal at $9, yeah, I'd buy it. Yeah. Oh yeah, actually, it's 52 close. Actually, $6. Wow. Yeah, I think if it got to single dollars, I'd probably buy it. That's where I've got it on my watch list as to take it a bit more serious. I don't know if it'll ever get there, but yeah, I like it. Hymns versus in mode. Can you only pick one over the next 5 years? Which one do you pick? Oh, geez. Probably hymns. Probably hymns. Yeah, it's got to be, hasn't it? Crypto, avoid it. I do not like crypto. I know a few people will be shouting at me in the comment section in about 2 minutes' time, going, "What are you on about?" But yeah, I'm not being a fan of crypto. In a recent video, you mentioned that you were buying 2 companies based in Israel. Are you not worried about boycotts and potential sanctions? That'd be Fiverr and in mode. No, not really. There's always people talking about boycotts on companies all the time. Look at Disney. Everyone's talking about boycotting Disney. There's always been people talking about certain boycotts on certain companies. I personally won't worry about it. I don't think there'll be any potential sanctions put on them. I don't think. So I think this should be all right. The big thing that's causing the issue is people are worried about supply chains. That's what they're worried about. And obviously, if there's going to be disruption on going to work, working hours, being able to get into the office, and depending, obviously if they're near a zone of conflict, that's what probably people are worried about. So yeah. You said recently trimmed DraftKings. I haven't owned them before. Is the retracing to the $32 so quickly a natural buying opportunity? I personally wouldn't buy DraftKings at $32 because I've got such a good position, and it's always really hard for me to comment about buying when I'm personally happy to buy and not to buy. The thing with DraftKings is if anything in the last 2 years have told you is that this has the ability to go to $20 within 6 months. It has the ability to go to $45 in 6 months. So that's what I would bear in mind with this one. And how you position yourself for that is up to you. But I've seen this stock drop 20% off good earnings. And for me, if I was to buy, that's the opportunity I would wait for. But that's me talking about a position that I am very happily built into. So it's tricky, isn't it? How many times do I check my accounts? Probably once a day. I can never really check during the market open because I'm at work. So I normally check sometime after work what's happened. And the other reason why I normally check is to look at if there's anything moved that much. And then that gives me the idea on like something to talk about for a video. If I weren't doing YouTube, I'd probably only check once a week because I think if you're a long-term investor, it's not healthy to look every day. So, because you're not investing for what they're going to be at the end of Tuesday, Wednesday, Thursday, Friday. You're looking at what they're going to be, years down the line. So, and even then, I think after every week would be a bit too much. But for me, I've got to be on it because of the content side. I guess you would probably want to check regularly to see if there's any drops on any stocks so you buy more. But at the same time, you could just use a stock app for that, really, couldn't you? So, yeah. That's what's saying that one. Is there any value in skills? Well done for reaching 50k. Thanks. I think they're big skills in a bad situation. Obviously, they've got a good good balance sheet, but they've got a lot to turn around still. Do I think the UK will go into recession? Would you be increasing your UK shares if they drop? I mean, yeah. I mean, technically, we're only 1 quarter away now, aren't we, from a recession? I think the Christmas period might help, because if you imagine like the Christmas period last year, everybody was like being a bit concerned, weren't they, about all the energy prices going up? So maybe this year round, maybe the kind of calming, even though when you look at energy prices, they're the same as last year, but maybe because people aren't as cautious, maybe they go and spend. As I was saying that, I was thinking, but at the same time, a lot more people are probably paying higher mortgage payments than last year, so maybe then that counters it. It is hard to predict. Um, it's hard to predict. I mean, it's 50-50. I don't know. I'm sitting on the fence on that one. But it shouldn't really affect shares that much. What will be the big thing is financials. If financials start deteriorating because of a recession, that's what will affect the share price more, and that then will cause them to drop, and then you might get opportunities to buy. But I think that the big thing that will move stock prices won't be because when you look at that, that's going to be backwards data as well. You know, when the recession data comes out, it'll be backwards data, and the stock market isn't backwards thinking. The stock market is future thinking. So even though the data might say, "Oh, we've just had a recession," the stock market won't mind that much, unless the data is absolutely shocking. Like if you're expecting like 0% growth and it actually comes down as like 2% negative GDP growth, that'd be the only way to completely for the market to freak out. That would be the only way. But the big thing is the market's future thinking. So the market, even if a recession does appear, the market will be going, oh well, that's only going to put pressure on the Bank of England to start dropping interest rates and everything like that. So if anything, it might actually be quite positive. That everyone might look at that from a point of view as, oh well, inflation is going to come down quicker. There's going to be a lot more price battling going on. Interest rates are going to have to get brought down, so it might actually benefit it more than anything. So yeah. Ghost says we are in recession on figures negative this time. So yeah, I mean it's going to be close. I mean it's if it is a recession, it shouldn't be a deep one, which is the key thing. But it's only in the UK, is it? Realistically, I don't think we'll see a US one, which is probably the bigger one, which will probably be the more important one. So yeah, and if anything, if we, like I said just then, if we do hit a recession, I think it'll actually be viewed in positive way. It'll put pressure on stimulus. It'll put pressure on inflation to come down because everything will be more price competitive. Interest rates coming down will get pushed forward a lot more. So it's probably not that bad at all, really, from a stock market point of view, to be fair. Anyway, I said half an hour. We've done the same thing. We've gone 52-minute long on the video. So we've gone over once again, but I'll call it there, guys. So thanks for joining the 15,000 subscriber special. And for all you guys that subscribed, I'll see you on tomorrow's video. I'm hoping to cover SoFi, unless anything crazy happens in the market. Then I'll end up covering that, but we'll see what happens anyway. Have a good evening, guys. I'll see you in a bit.